J.D. Frost. Welcome to the Accountability Show. I'm very excited about this show today because we're going to be talking about the 5 pillars of mastering tax strategy, which we have been discussing over the last 2 to 3 episodes. Today, we're going to talk about some specific examples about how this can help you in your overall tax planning. Please make sure to like and comment and share this episode because this is going to be packed with real life examples where we save people real money and put that real money back into their pocket so that they can invest it in their business. Because after all, this tax that you pay every single year, it's your money. You are filling out a form and you are abiding by the IRS tax code in order to pay the government money that is called a tax, and it's coming out of your pocket. So we want to make sure that we're following those rules and that you're taking advantage of every single opportunity that you have in order to save that money and to invest in your business and grow your business. Because after all, that's why you started your business. So the first pillar of mastering tax strategy is entity formation. I was just on the phone today with a client who has an LLC, a single member LLC, and they had a flow-through income of $100,000. Now, when they had a flow-through income of $100,000, that created a $30,000 to $35,000 tax bill. I was doing tax planning with them. I used the template that we have on our website, www.starttaxplanning.com. And when we went over that template, we were able to show that they were going to owe $30,000 to $35,000 in taxes. Now, the first pillar of mastering tax strategy is entity formation. We created an S Corp for them this year that would enable them to own their single member LLC through that S Corp. That's perfectly legal. And so now, since they've converted that to an S Corp ownership, that tax bill of $30,000 to $35,000 this year was reduced to $20,000. So it saved them $10,000 to $15,000 just this year, just by forming that entity. That is what I'm talking about as far as saving money on taxes and utilizing the tax code and utilizing one of the 5 pillars is entity formation, entity structuring. Deciding what type of entity you have and really understanding how the tax code is treated under that type of entity will save you so much money every single year. Now, they also are going to pay themselves a little bit differently moving forward into 2021. And that is what we'll discuss when we're having our tax planning calls next year. The second pillar of mastering tax strategy is tax planning. Tax planning consists of 3 things. The reason we do tax planning is we want to eliminate any penalties and interest that are unnecessary. So we want to calculate what's called the safe harbor calculation. The IRS requires you to pay in 90% of your current year tax and 110% of your prior year tax in order to avoid any penalties and interest. There's no point in paying the penalty and interest if you don't have to. So tax planning allows us to plan for that. The second reason that we do tax planning is that we want to predict what your tax amount is going to be. You don't want to be surprised by a tax bill. Like this client that we talked with today, we were doing tax planning. We were estimating what their tax bill was going to be through using our template on starttaxplanning.com. The third reason why we do tax planning is we want to utilize every strategy we possibly can to lower that tax bill. Just like on this client, we utilized entity formation. That allowed us to lower their tax bill by $10,000 to $15,000. So it's very, very important for you to apply tax planning to your tax strategy every year. And this gets more and more complicated with the more and more entities that you have, especially if they're across different industries. So our third pillar of mastering tax strategy is specialty industry tax credits and deductions. Do you notice a pattern here? The specialty industry tax credits and deductions are going to apply to each one of your entities in a different way depending on their industry and depending on the size of the company. And the way that we are able to utilize this for one of our other clients is we found out that one of our clients purchased 2 buildings this year. One of them was for $1.9 million and the other one was for $2.7 million. Well, one of those is a church and the other one is an office building, okay? And so when we were having the discussion during tax planning, which is that second pillar of mastering tax strategy, we were able to discover that they purchased these buildings. They had never executed a cost segregation study before. A cost segregation study is an example of a specialty industry tax credit and deduction. This enables them to accelerate the depreciation of that building because they break down the building into all types of different terms and different types of property, 5, 7, and 15-year property, which allows you to depreciate or to accelerate the depreciation in the current year. That one example saved them $330,000 in taxes. I had another client this year that purchased a $350,000 building, and they are going to save $30,000 in taxes. So specialty industry tax credits and deductions are a real thing. Depends on the industry that you're in, and it depends on the type of business that you have, how big or small that business is. Depending on the revenue, maybe the number of employees, there are all kinds of different variations. That's why it's so important to execute on tax planning. The fourth pillar of mastering tax strategy is the tax method of accounting. One specific client that comes to mind here recently is a client that is in the construction industry. Their tax method of accounting was cash. They had never heard of what's called the completed contract method. And so they were paying taxes based off the cash that they had received. Another version of that is an accrual completed contract method. Now that is a method of accounting in which you're able to utilize accrual accounting, and also you're only paying tax on those jobs that are completed. You're not paying tax on jobs that are not completed. So this is a tax method of accounting that you elect on your tax return, especially if you're in construction. So the industry that your business is in has a big determining factor in whether or not you're able to take advantage of this method of accounting. That particular client was able to save $120,000 that tax year just by electing that method and knowing how to treat the revenue and recognize the revenue on their tax return. Finally, the fifth pillar of mastering tax strategy is captive insurance companies. I had another contractor 2 years ago that decided to form a captive insurance company. They had deferred their revenue for a long period of time, and they were able to contribute $3 million into their captive insurance company. This allowed them to save $1 million in taxes in 1 year. They were able to create a $3 million tax deduction, and they saved all that money in taxes and held on to their money inside of a corporation, which is the insurance company that they created. These are real life examples. They all happen. They happen every single year, and they happen every single time we do tax planning with a client. That's why you need to go sign up for it. So I'm going to promote this again, www.starttaxplanning.com. This is where you're going to have your real life example of mastering tax strategies that we have put together that will have an effect on your business. Thank you so much for tuning into this episode. Please like, share, comment, and turn on your notifications. Please listen to the podcast too that's called the Daily Ledger Podcast. It's on Spotify and iTunes. Really appreciate you tuning in these episodes. And our next episode is going to be talking about how to grow and scale your business, which is the final piece of a strong accounting foundation for your business.